G'day, Peter.
Hi, Andrew. How are you?
Very well, thank you. Both you and I have been talking about our entrepreneurial clients who are looking to start new businesses. We've been helping them put business plans together to raise capital and to look at the various government grants and other research and development deductibilities that are available. And both you and I think that accountants need to know more about this because some clients are not being advised correctly. So I thought this could be an opportunity. Explain to me, what is allowable research and development expenditure?
Research and development is available to a company. Unfortunately, it's not available for any other type of entity. And it relates to someone having an idea and documenting that idea. It requires the company to have undertaken some prior art searches or literature searches. That sounds complicated, but today with the internet, it is relatively easy to undertake realistic searches. Basically, the government will not fund someone researching something that the knowledge has already been determined. So it needs to be in the pursuit of new knowledge. The whole system is on a self-assessment basis in that the company does its own research to determine whether it might be eligible. There's a need then to identify an hypothesis. And again, it's jargon, and unfortunately, that's what's included in the legislation. Basically, the hypothesis is a series of statements that you then have to undertake some experiments to either prove or disprove them. All of this needs to be documented. And if you've spent more than $20,000 on this process in a 12-month period, then the company is able to lodge an application for a research and development incentive rebate, which for companies under $20 million is calculated at 43.5% of the eligible research and development expenditure. So the expenditure includes wages, it includes wages on costs, it includes experts that the company hires or consultants to assist them on a process, and it includes the operating costs of the business that are reasonably able to be allocated to research and development. So if 60% of a factory is committed to research and development, you can virtually look at 60% of the rent, 60% of the electricity, and other costs being allocated to research and development.
Okay, so for example, if a cane farmer up north said, I think I've got an idea about a new way of harvesting cane, and they researched that and looked at some of the ideas around the machine and the technique, and then their hypothesis could be that, yes, we can build this machine, we can use this new form of hydraulics or vacuum sucking, whatever it may be. I'm used to harvesting grapes, which is what they do. Yeah. Therefore, if we build this, we think we've got a market. So it's those sorts of hypotheses, those questions. If we do this, spend this, undertake that, and that then means, okay, we can then run that project, and the money we spend, as you said, a percentage of overheads and direct costs associated with that research and building an experimental machine, that could all be claimed as research and development.
Basically, yes. There are rules, and we've developed a system which will help accountants undertake this work. I've been concerned for some time that there is, I think, a significant amount of research and development activities being undertaken by small businesses, medium-sized enterprises, without an awareness of what they can claim. Some people are aware, of course, but others aren't.
No.
And part of this problem is accountants not fully understanding how it works. It doesn't happen every day, and it's not going to apply to every client. Traditionally, businesses have ended up having to go and deal with specialist consulting firms and some of the larger accounting firms. The risk for small and medium-sized accounting firms from that is that if the client has developed something that is very good, they're probably going to lose the client because they're going to be encouraged to go somewhere else. I see it as being an opportunity for an accountant to literally be growing with their client, that they can help them as they undertake these research and development activities to then perhaps move into some other government grants like the Accelerating Commercialisation Grant, which will assist the company to commercialize their technology. There's a grant of up to $1 million on a 50-50 basis. And that can help get that research or that prototype or whatever it's been developed into the marketplace.
So 50-50 is the client spends 500,000 and then the government gives them 500,000 through the Accelerating Commercialisation Grant.
That's right, and that money from the government is made available as the company incurs that expenditure. So it's not in arrears. Okay. The government actually pays in advance on that program. So a budget's got to get submitted to AusIndustry. Yep. They approve it. And in fact, the government pays the first first tranche of the money for the first 3 months in advance. And then based on what you spend of that and what your budget is for the next 3 months, you get your next tranche of money. And so it works on. So it's a very good government program.
And if they can't get that, they might be able to get an early stage innovation company grant.
Yes, this is a fantastic opportunity for both the companies who are looking to raise capital and investors. When Mr. Turnbull initiated the legislation for crowdsource funding equity raising companies, the cousin to that legislation was early stage innovation companies. Unfortunately, a lot of people don't know about it. But a young company under 3 years of age, sometimes up to 6 years of age, that's got income of under 200,000 in the last 12 months and expenditure under $1 million in the last 12 months, that then passes one of two tests. The first test is the gateway test, which looks at what their level of research and development has been, whether they've been in the Accelerating Commercialisation Grant, whether they've been admitted to that. They have to earn 100 points. But if you've been doing significant amount of research and development as a percentage of your expenditure and have been admitted to the Accelerating Commercialisation, you end up with 150 points. So you're in the categories to be a early stage innovation company. So
how does it help the investors?
Well, the investors get a tax rebate off their tax bill, calculated at 20% of their investment, but there are investment sublimits. For a retail investor, the maximum investment they can make in that type of company is $50,000. Yep. So if they invest up to $50,000, they get a 10 grand rebate off their tax return. But if they're a sophisticated investor, the rebate is still 20%, but the maximum amount is 200,000. So that's obviously calculated on $1 million.
Okay, so let me just interrupt there. Sorry. So if I'm a sophisticated investor, I put $1 million into a project, I would get a rebate from the ATO of 200,000.
It comes off your tax bill. If you don't use it all that year, it carries forward until you do use it. You don't lose it. It's not not a matter of use it or lose it.
Understood.
It carries
so,
on.
Pete, what you're saying is research and development could be claimed in the ideas and initial research stage. Then we might move into accelerating commercialization. Then we might move into early stage innovation.
Yes.
And really, we owe it to our clients to understand this more so that we can help those that might qualify. From what you're saying, it has to be documented. It's a bit like applying an audit to make sure that it will stand up to the ATO scrutiny so it doesn't come back to bite you. So how can ESS BIZTOOLS help accounting firms learn more about how all of the rules about what qualifies and what doesn't?
Well, we have product packages which are pre-prepared, starting at the very beginning and working through that our subscribers use and we've had them for 2 years for early stage innovation companies. We've had them for 10 years since Accelerating Commercialisation started. Yep. But the big one we're about to release in the next 2 weeks is a significantly upgraded research and development product package, which starts with an idea, that your client has got an idea. Where do they go to from there? So it sets out
Yes.
for them the explanation of these terms like hypothesis and experiments that have got to be conducted, what the role of an expert is, or a consultant.
Yes.
What the it's very much similar to what the government envisages happens in universities when research projects have been undertaken. There
Yes.
needs to be a document. There needs to be an aim, what we're going to be achieved.
A case, in other words.
Yes, and experiments have to be documented, and the expenditure has to be able to be accounted for. So you need to set up the summaries. But if you can do it like that, some businesses receive very high amounts paid back to them. For argument's sake, at one stage, the government was proposing to introduce legislation to have a cutoff for businesses with turnovers under 20 million of $4 million being paid back to them for R&D. Now, they scrapped that in the October budget, and that limit's no longer involved. But that's obviously indicating there were companies with 20 million or less turnover receiving more than $4 million.
So if I spent $1 million on a project, R&D, and it qualified through the audit of making sure it's ideas, research, hypotheses proved, and we're ready to move and commercialize it. If I spent $1 million, do I get a rebate from the ATO, or is it just credited against my tax?
Well, good question. If your turnover is under $20 million, you can either get a rebate of your tax of $435,000.
Yes.
But if you were trading at a loss, and a lot of these companies are when they're doing initial research and development, let's take a hypothetical and say that company has traded at a loss of $500,000 for the 12-month period. In the company's tax return, they can elect to get a cash refund, and the tax office will pay $435,000 into that company's bank account within 30 days of the tax return being lodged.
Yes.
The government were very specific in their instructions to the tax office. They want that money to flow because guess what? That money gets reinvested normally in further research and development. So the
43.5% of the R&D.
Yes.
Okay, that's interesting.
Now it's then reducing what the company's carry forward losses are. They don't get everything, so they've now only got 65 grand as a carry forward loss, and that hypothetical. But the main thing is they've got that cash.
Indeed, cash, and that might allow them to move into an accelerating commercialization grant or an early stage innovation grant, or even professional investors, sophisticated investors, or even crowdsourced funding.
That's right, and all of those things are now available. We've got a lot more avenues than just Section 708, which has been there for 35 years. That's now available for companies to get themselves properly structured. And if they're going to scale up, and if you go back to the scaling up concept, the funding of the business is one of the most important things. And these company structures and government grants are in place to help companies do that funding. And
with COVID requiring greater innovation due to the lockdowns that have certainly affected certain sectors, this is, to me, imperative that accountants understand these options, be able to educate their clients, and then make sure they run the right processes to meet the audits.
That's right. And, I don't know how many people out there have gone to their sheds or sat on their computers during this lockdown period, but I suspect there's a lot of them, could be thousands of them, who have been fiddling. Now, it doesn't mean that they all have invented a new product or service, but part of our marketing material within this updated product package we're releasing in 2 weeks is for accountants to utilize to alert their clients that these things are on. And and if someone's got a good idea, one of the first steps is to have a conversation with him or her, and then if they've got something that looks positive, get them into a company, because they can't claim any of this unless they are a company.
Very good. Well, Peter, we will explore this in further detail in our webinar, which is on when?
Yes, we have this on Wednesday, the 17th of February at 11:30 a.m. AEST. No, sorry, it's 11 a.m. I think 11 a.m. AEST, 12 noon AEDT. We're going to have a conversation and explore these options.
Very good. Nice to talk to you again.
Thanks, Andrew. Have a great day.
Pete. Cheers.
Bye.